Hello everyone, welcome back to the channel. Today we're taking a close look at the Schwab International Equity ETF, ticker SCHF. If you're looking for low-cost exposure to developed markets outside the United States, think Japan, the UK, Canada, France, and many others, SCHF is one of the most popular and affordable options available. With an ultra-low expense ratio of just 0.03%, it gives you broad diversification across nearly 1,500 stocks while keeping costs minimal. As of April 10th, 2026 close, SCHF is trading at $26.15. It has recovered nicely from its 2025 lows and hit a high of $27.17 back in late February. Right now, the ETF is consolidating in the mid-$25 to $26 range after a strong rebound from March dips. Let's break down the current technical picture and what it could mean for investors. Over the past year, SCHF has delivered impressive gains, up roughly 35 to 44%, depending on the exact period. Year-to-date in 2026, it's showing solid positive returns around 8 to 9%, outperforming many domestic benchmarks as money rotates toward international equities. This shift makes sense. Many investors are seeking diversification as U.S. valuations remain elevated, while international developed markets offer more attractive relative valuations and a healthy dividend yield hovering near 3%. SCHF's 30-day SEC yield sits comfortably above 2.2%. Making it appealing for income-focused portfolios too. The broader story for international stocks has improved in recent months, with softer U.S. dollar conditions and renewed interest in global growth helping support prices. Looking at the charts across multiple time frames, SCHF remains in an overall uptrend. The long-term structure is constructive, with the ETF holding above key moving averages and showing steady recovery from the 2025 bear market lows. On the daily and weekly charts, we see price action consolidating just below the February peak. Momentum indicators are generally supportive. We're seeing positive readings on MACD and RSI across daily, weekly, and monthly views, suggesting the underlying strength is intact without being extremely overbought. Heiken Ashi candles are painting a mostly bullish picture on the higher time frames, indicating the recovery trend is still dominant. Volume has been respectable during the recent up moves, though we'd like to see stronger participation if price attempts a fresh breakout above the $26.50 area. We're also watching several important time-based windows over the coming weeks and months. On the weekly time frame, potential turning points or increased activity could appear in the late April to early May period. On the monthly time frame, the next notable window falls around July to August. These time targets often mark periods where price action can accelerate, reverse, or consolidate as different cycles align. Key price levels to watch include resistance near the February high around $27.17, immediate support in the $25.80 to $24.50 zone, and deeper support if we see any meaningful pullback. Overall, the multi-timeframe alignment points to a moderate bullish bias, as long as price holds the recent consolidation lows. For investors, SCHF continues to serve as an excellent core holding for international exposure. The low cost, broad diversification, and current momentum make it attractive for long-term portfolios, especially if you believe global ex-US markets still have room to catch up. Short-term traders should watch for a clean move above recent resistance with increased volume for continuation setups. On the other hand, any dip towards stronger support levels could offer a higher probability entry for those looking to add on weakness, provided momentum indicators stay constructive. Risk management remains important. International equities can be sensitive to currency swings, geopolitical events, and shifts in global growth expectations. Always size positions appropriately and use stops below recent swing lows if you're entering new trades. To wrap up, SCHF looks constructive in a longer-term uptrend with solid momentum support, but it's currently digesting gains in a consolidation phase. Whether you're already holding international stocks or considering adding exposure, SCHF remains one of the cleanest and cheapest ways to do it. If you found this update helpful, drop a like, subscribe for more ETF and market analysis, and let me know in the comments. Are you bullish on international equities right now, or still waiting for more confirmation? Thanks for watching. Trade smart, and I'll see you in the next video.